Most people spend their whole lives trying to climb someone else's ladder. They chase titles, promotions, and applause inside systems they don't control. They call it a career, but it's really a cage with polished brass bars. When I was young, I realized something simple but uncomfortable. Working for wages might make you comfortable, but it will never make you free. The world rewards owners, not employees. Ownership is how you turn effort into leverage. It's how you make money while you sleep. Every dollar you invest buys a tiny piece of freedom that compounds quietly in the background while you're busy living. That's why the first $100,000 matters so much. It's not just money. It's proof that you can be an owner. It's a psychological threshold. Once you cross it, you start to see the world differently. You stop thinking like a consumer and start thinking like a capitalist. You realize the goal isn't to earn more so you can spend more. It's to earn more so you can own more. Ownership turns chaos into calm because suddenly the system works for you instead of against you. The sad truth is that most people never learn that lesson. They confuse activity with progress. They jump from job to job, hoping a higher paycheck will fix what's really a discipline problem. It never does. If you spend every dollar you earn, you're just a hamster running faster in the same wheel. To get rich, you have to step off the wheel and build something that works while you rest. Even a small portfolio, properly nurtured, beats a lifetime of frantic busyness. Another mistake people make is worshiping intelligence over character. They think being smart is enough. It isn't. The world is full of brilliant fools who can calculate everything but their own downfall. I'd take a person with average intellect and extreme discipline over a genius who can't control his impulses any day. The game of compounding doesn't reward brilliance. It rewards behavior. The right temperament beats IQ 9 times out of 10. Temperament means you can stay rational when everyone else is losing their mind. It means you can watch markets fall and still sleep well. It means you can hold cash when others mock you for being cautious. You can invest when others are terrified. That emotional balance, that ability to do nothing when nothing needs to be done, is the closest thing to a superpower in finance. Buffett and I built Berkshire on that principle. We didn't move fast. We didn't chase trends. We just avoided stupidity. That alone was enough. If you're serious about wealth, stop chasing excitement. Excitement is the language of gamblers. Boredom is the language of investors. If your strategy feels thrilling, it's probably dangerous. Real wealth feels dull because it's built slowly, in silence, through decisions so small they barely register day to day. People hate that. They want fireworks. They want drama, but compounding hates drama. It demands quiet, patience, and consistency. You'll notice the older you get, the less you care about being right, and the more you care about avoiding disaster. That's wisdom. Survival is underrated. Getting rich is mostly about staying alive long enough for the math to work. Avoid debt you can't handle. Avoid people who drain your energy. Avoid habits that steal your focus. The goal is not maximum return. It's maximum endurance. When I talk to young people, they ask me what to invest in. I tell them, invest in yourself first. Learn to think. Learn to write. Learn to build judgment. Your brain, if trained properly, becomes a compounding machine far more powerful than any stock portfolio. And when your mind compounds, your money follows. But if your mind is chaotic, no amount of wealth will save you. You'll sabotage it from the inside out. Another point. The best thing a human being can do is help another human being know more. That's not just charity, it's strategy. The more you teach, the more you clarify your own thoughts. The more clarity you gain, the better your decisions become. And good decisions repeated compound into an extraordinary life. Now, if you've reached your first $100,000, congratulations. But don't stop. That milestone is only the beginning. Keep saving, keep learning, keep compounding, And importantly, keep your ego small. The moment you think you're invincible, the market will remind you you're not. Wealth comes slowly, but ruin comes fast. Stay humble, stay rational, and stay patient. One day, if you're lucky, you'll look back and realize that the first $100,000 wasn't just a financial achievement. It was a transformation of identity. It changed how saw risk, how you handled envy, how you thought about time. That's the real payoff. The money is nice, but the discipline that built it is priceless. So as you move forward, remember this. The world is full of noise. Most of it is worthless. Ignore the chatter. Focus on what you can control. Your savings rate, your patience, your work of competence, and your temperament. Do that for a few decades, and life becomes very simple. You won't need luck. You'll just need time. I'm not saying it's easy. I'm saying it's worth it. The first $100,000 hurts like hell. But once you earn it, the rest feels inevitable. Because the person who can save and invest their way to that first milestone has already built the one thing money can't buy, the ability to wait. And in this world, patience is profit. When I was starting out, there were plenty of people in Los Angeles richer than me, or at least they looked richer. They had nicer houses, flashier parties, shinier cars. But I didn't admit them because I knew most of them weren't really rich. They were leveraged. They looked like kings until the tide went out. And when it did, they were exposed, paupers in expensive suits. That's the hidden tragedy of envy. It not only makes you stupid, it makes you fragile. You start taking risks. You shouldn't. You spend money you don't have. You build a house of cards hoping to impress people who aren't even paying attention. The cure is simple. Stop comparing. Think an owner, not a consumer. Care about your own pile, not your neighbor's, because the world doesn't care how you look. It only cares what you can withstand when the storm comes. If you can kill envy, you'll save more. If you save more, you'll hit that first $100,000 faster. And once you hit it, you'll laugh at everyone else trying to keep up appearances. The next time you feel envy rising in your chest, remember this. It's the only sin that offers zero reward, all pain, no pleasure, free poison, and most people drink it daily. Don't be one of them. You don't reach 99 years old without making some very stupid mistakes. I've made plenty. One of the biggest. I sold too early. It sounds small, harmless even, but it probably cost Mom more money than all my other mistakes combined. Here's the story. Decades ago, I bought into a company at a cheap price. I liked the business. It was sound. The people running it were honest. The economics made sense. Then the stock doubled. I thought I was clever. I sold. I patted myself on the back, and then I watched that same company multiply tenfold, maybe 20-fold. I don't even calculate it anymore. It hurts too much. That little act of impatience, that urge to look smart by taking profits, cost me a fortune. Most people think the hard part of investing is buying. It isn't. The hard part is sitting while nothing happens. Sitting while everyone else jumps in and out, bragging about their trades. Sitting while the world screams at you to do something. Buffett always says his favorite holding period is forever. That's not poetry. It's rationality. If you find something truly great, why sell it just because it's gone up? Selling a wonderful business too early is like selling a winning horse halfway through the race. You lock in a little gain, but forfeit the real prize. I learned that lesson the hard way. It scarred me, and it made me much slower to sell ever since. The irony is that the biggest investing mistakes people make are symmetrical. They either hold garbage too long or they sell greatness too soon. Both come from the same disease, impatience. When I look back, I don't regret missing the wild speculations or the fads I didn't understand. What I regret are the moments I owned something good and couldn't sit still. If you're lucky enough to find a wonderful business, don't be in a hurry to part with it. Those are rare. Compounding needs time more than anything else. The same impatience that cost me millions has made others poor. The average investor buys at the top, sells at the bottom, and repeats until broke. They can't sit still. Their attention span is shorter than a goldfish. If you want to beat 90% of investors, here's the secret. Sit. Sit on your savings. Sit on your investments. Sit on your hands. Do nothing most of the time. The world is full of hyperactive fools trying to outsmart each other. Don't join them. I once said the big money is not in the buying or the selling, but in the waiting. That wasn't cleverness. That was scar tissue talking. So if you want to avoid my mistake, remember this. Activity is the enemy. Stillness is your friend. Don't be too smart for your own good. If you ever feel that itch to sell, just because something's gone up, stop. Ask yourself, has the business changed? Or is it just my brain craving a dopamine hit? Most of the time, it's your brain. Ignore it. You might just save yourself from the most expensive mistake of all, the one that feels clever but robs you blind. My impatience made me rich. Slower than I could have been, but at least I learned. The question is, will you? The world is full of people absolutely certain about things they know nothing about. Ignorance mixed with overconfidence. That's the default human condition. I've seen people go broke, not because they were dumb, but because they were too confident in lousy opinions. They couldn't say 3 simple words. I don't know. When I was young, I thought smart people had answers. As I got older, I realized the truly smart ones were the people who admitted ignorance quickly. The faster you can say, I don't know, the richer and wiser you'll probably become. Take investing. The average person reads a headline about oil or tech or interest rates and suddenly becomes an expert. They rush into trades with conviction they haven't earned, and when it blows up, they act surprised. What do they expect? That the world rewards arrogance dressed up as insight. Buffett and I have been successful largely because we stayed in our lane. We ignored 99% of opportunities. People think that's weakness. It's not. It's survival. You don't have to know everything. You just have to know the boundaries of what you know and refuse to step outside them. That kind of humility will keep you out of the graveyard of overconfident fools. There's a saying, an investor only needs to do a few things right, as long as he avoids big mistakes. Most big mistakes come from being too sure of yourself. That's why I spent my life preaching the gospel of doubt. Years ago, a man pitched me a hot deal. Charts, projections, confidence dripping from every word. I told him I didn't understand the economics. He looked at me like I was an idiot. Years later, his business collapsed. He lost everything. My only regret was not telling him bluntly enough that he was full of it. Confidence is cheap. Knowledge is expensive. Most people buy the cheap version and pay the price later. Psychologists call it the Dunning-Kruger effect. I call it being stupid, not knowing it. The loudest people in the room are usually the dumbest. The smartest ones are the ones asking the most questions. So, how do you protect yourself? By building a circle of competence. You don't need to know everything. You just need to know what you actually understand and never pretend otherwise. That's humility, and investing humility pays better than ego ever will. The first $100,000, that number has haunted more young investors than any other. It's the great divide between struggle and momentum. The first $100,000 is the son of well, let's just say it's not elegant. It's just the truth. Everyone dreams about millions. They talk about stocks, real estate, crypto, startups. They want the end of the story without enduring the beginning. But until you get that first $100,000, you're not even in the game. You're still pretending. Why is it so hard? Because you start from nothing. And nothing compounds into nothing. It's like trying to push a heavy boulder from a dead stop. Once it's rolling, momentum helps. At the start, every inch feels impossible. I know because I was born in 1924, right into the Great Depression. My family wasn't poor by choice. We were poor because the whole country was broke. My grandfather went bankrupt. My father lost clients. I grew up watching financial weakness turn proud men into desperate ones. And I decided early on I'd rather go through life with money than without it. But there's a catch. To get that first $100,000, you have to behave in ways most people won't. You have to save when it feels pointless. You have to ist when the numbers look trivial. You have to ignore the urge to imitate your neighbor, the one who just bought a shiny new car on credit. When you're young, $1,000 feels like a lot. You save it, it earns $20 in a year, and you think this is useless. That's why most people give up. They'd rather buy a toy today than plant a seed for tomorrow. But the joke is on them. Those tiny, boring decisions repeated for years turn into something formidable. Once you cross $100,000, the compounding engine finally starts working for you instead of against you. 10% on $100,000 is $10,000. Suddenly the returns are visible. Suddenly the effort feels worth it. Most people never get there. Not because they can't, but because they're impatient, stupid, or both. They want shortcuts. They gamble. They speculate. They confuse luck for skill. They think wealth comes from brilliance. It doesn't. It comes from surviving long enough for compounding to do the heavy lifting. Making your first $100,000 is like digging through wet cement with a spoon. Miserable, slow, backbreaking. After that, it's like slicing through butter with a hot. The texture of life changes. The irony is that the habits required to reach $100,000 are the same habits that eventually make you rich. Live below your means, save like a pessimist, invest like an optimist, and ignore the idiots. It's not complicated, but it is hard. Boy once said, nobody can help you if you don't save. And I meant it. If you spend everything you earn, there's no investment genius in the world who can rescue you. Not me. Not God himself. The secret is brutally simple. Be slightly less stupid than the average person. Don't envy. Don't overspend. Don't borrow too much. Don't chase hot tips. Do that long enough and the first $100,000 will come. And once it comes, the next $100,000 will come faster. Then faster still. When I was a young lawyer, I didn't make much. I kept saving. I bought a few stocks. I lived simply. I didn't buy things to impress people. I didn't care about. Part-time, my pile grew. That discipline, those dull, repetitive habits carried me for the rest of my life. Here's the truth. $100,000 doesn't make you rich, but it proves you're capable of discipline. And discipline is the rarest commodity in the modern world. If you're under 40 and broke, don't despair, but don't kid yourself either. You have to save until it hurts. You have to sacrifice when it's uncomfortable. You have to look your friends in the eye when they laugh at your cheap habits and know deep down you'll outlast them. Because the compounding machine doesn't reward the clever. It rewards the stubborn. That's the paradox of wealth. The beginning is unbearable. The middle is tolerable. The end is inevitable. The first $100,000 is hell. But if you get through it, you'll wonder why everyone else is still stuck at zero. So the question is simple. Are you willing to suffer now so you don't suffer later? Most people aren't. They want comfort today, even if it means poverty tomorrow. They want applause, not results. But comfort is a liar and applause is worthless. The path to freedom is paved with delayed gratification. Every dollar you save is a vote for your future self. Every indulgence you skip is compound interest in disguise. If you want to guarantee your own misery, start comparing yourself to other people. That's envy, the dumbest sin of them all. Why? Because it's the only one where you get nothing out of it. Gluttony gives you a meal. Lust gives you pleasure. Greed might even make you richer. But envy just makes you miserable because someone else has more. It's like lighting yourself on fire to spite your neighbor. When I was young, I watched envy destroy lives. A brilliant lawyer I knew worked harder than anyone, couldn't stand that others were getting richer faster. Instead of sticking to his practice, he chased every hot deal, every stock craze. He wasn't trying to make money, he was trying to beat the guy next to him. He lost his shirt. That's how envy works. It blinds you. It makes you chase things you don't even want, just because someone else has them. It drags you into games where you have no edge, and eventually it makes you broke. Buffett and I never wasted time on envy. We admired some, learned from others, but envy never. What would be the point? If someone's got a yacht bigger than mine, good for him. I don't even want the damn yacht. Here's the irony. The more you compare, the less you save. Envy drives consumption. Your neighbor gets a new car. Suddenly your old one feels inadequate. Your friend travels to Europe. Suddenly you feel like you deserve it too. And there goes your savings rate torched by vanity. People ask me all the time how to get rich. I tell them the same thing. Stop trying to look rich. Stop trying to impress idiots. The world is full of fools spending money they don't have show off to people they don't even like. Don't join them. The math is simple. If you save $10,000 a year for 10 years, you'll have a pile that compounds. If you waste $10,000 a year pretending to be rich, you'll have nothing but memories and debt. Which one do you want?